geopolitics has changed the game quite significantly. The world order has changed. Countries are recalculating, companies are recalculating. So when we look at investments, we want to make sure that we have very strong convictions.
The world is moving faster than ever before. Entire industries are being reshaped overnight, and leaders are having to make decisions in conditions no one would have ever predicted. So, what the series does is it gives you an inside look into how these decisions are made or can be made. Real-life stories and lessons from leaders who know how to navigate this volatility, who know how to build trust, and who move forward when the future feels uncertain. Hello. I'm delighted to be today in CapitaLand's headquarters. And with me, I have the Group CEO of CapitaLand Investments, Mr. Lee Chee Koon. Welcome, Chee Koon, to our podcast. Thank you for being with us.
Thank you, Su Shan, for inviting me.
Maybe let's begin with talking about some history when you took over and some of the major changes that happened, especially in 2021 when you had this massive transformation. And then COVID hit.
Yes.
Exciting start. And then after that, the world changed quite quickly, right? And how you've pivoted your strategy, how you had to, as a leader, as a CEO in this time of great change, make some big decisions. What were the challenges? So let's start with that. And then maybe let's then talk about your geographic footprint. And let's talk about, your leadership style.
Oh, thank you. That's a lot to unpack.
That's a lot to unpack.
Thank you. Just to put things in perspective, there's a lot of historical ties between CapitaLand and DBS. In fact, this building that we are all in here was supposed to be the HQ of POSB building. A lot of people probably are not aware.
I didn't know that.
Yeah,
what was it going to be called? POSB Tower?
It was supposed to be the HQ building. I don't believe they had at that point in time decided what was going to be the name. But
wow.
It was during the Asian financial crisis, one thing led to the other.
Right.
And then the CapitaLand took over.
Right.
And then subsequently, obviously, CapitaLand was formed through the merger between DBS Land.
Yes, of course. DBS Land and Pidemco. Yeah.
So that's a lot of history.
That's a lot of joint history.
Yeah.
Same pedigree.
Yes. So
Same
CapitaLand
heritage.
wouldn't have been here today without DBS. So I want to at first thank DBS for years of partnership and help, and for us to build us to where we are today. And the history of CapitaLand really started as a development company. Great leader at that point in time. We had Mr. Liu Man Leong, who was the founding CEO. And then after that, Ming Yan was the CEO. So we had strong development capabilities. And of course, Singapore was a small market. We needed to go overseas.
You had to go overseas, right?
No choice. The market is just too small. And what happened is, at that point in time, obviously, I believe at that point in Singapore had a lot more experiences in terms of development projects. Going overseas to places like China, to Vietnam, and even to India was possible because there was a gap in terms of development capabilities in these markets.
And we had an advantage?
We had an advantage.
No.
That was one. And the second thing was capital.
Capital.
Emerging markets, there were issues around capital controls, FX, and the capital markets were just not developed.
Yeah.
And we could bring capital, we could bring development capabilities, and together with the willingness to send the best people to these markets, we managed to build up development platform beyond the shores of Singapore. And of course, and the balance sheet started to get a bit more constrained because, development projects requires a lot of capital. We pioneered the REITs industry in Singapore.
Indeed.
Yeah.
You had the first REIT.
Worked very closely
with DBS in those days.
To launch the REITs. And when I took over at that point in time in 2018, we were very much a development company, a developer, with a small asset management capability.
I see. So you were developer first, asset manager second.
That's right. So when I took over 2018 September, we did a very deep review of our strategy with the board and the management. The developers in all these emerging markets, whether it is in China, in Vietnam, developers are no longer, they are big. They have access to capital. They can have access to land. They could build fast. They could build cheaper. They could sell not lower.
They could get bank loans onshore, right? Yeah. So the competitive edge kind of disappeared. Yeah.
So we have to ask ourselves, what do we need to do to change our business model so that we can be relevant and we can compete globally.
Yeah.
And we decided that the right thing to do is to really focus on building an asset management platform.
I see.
So that was the main reason. And why asset management? Asset management is really about building up teams in different markets, capabilities across different asset classes. If you have good teams or people who can find good deals that are below replacement costs, you can find people that can create value, then you will be able to raise capital.
And you can scale faster?
You can
is
scale
that what
a
it
lot
is?
faster.
So, Chee Koon, I know you crossed, is it 120 billion now in
Yes.
funds, assets under management?
Yes.
Congrats. That's quite quick, I have to say. Remember, you wanted to reach 100
Yes.
and you got there. You know, to your point, you just said you moved from being a developer to more of an asset manager.
That's right.
What kind of changes in terms of team composition, what kind of talent? Did you have to retrain people? Because you said you had a bunch of really good developers.
Yes.
I can imagine all willing to go everywhere, great development skills. Development skills and asset management skills may not be the same.
Yep.
How did you move your entire organization to be more in line with your strategy?
In a strange way, COVID kind of helped in the merger exercise.
Oh, really? How?
It was one of the most challenging moments, at least during my corporate career. We were concerned that the banks would put the
Foreclose or
loans,
something, yeah.
foreclose, and we
Yeah.
spent so much time talking. And we drew down the bank loans. We drew down about $9 billion worth of loans just to make sure that...
Just to keep the lights on, right?
Yeah, just to make sure that in the event that nobody comes back to the
Liquidity.
office, we had 2 years
Runway.
things will be okay.
Yeah.
During COVID, everybody had to work together because we had a common enemy,
Yeah.
which was COVID.
Yeah.
And that really helped in the merger issues
interesting.
and really helped to galvanize the
Yeah.
team and
Yeah.
build a strong culture where we have a strategic clarity of what we want to be as an asset manager.
Yeah.
Build a strong team culture
Yeah.
where everybody was very focused, and we built a financial discipline as well.
Yeah.
And of course, during COVID, the major thing that we did was to do the restructuring exercise, where we managed to convince Temasek, which was our major shareholder, to privatize the development business and keeping the asset management side listed. And that gives us a lot more flexibility. We believe that by doing a restructuring and becoming an asset manager where the income stream is a lot more visible, the share price will better reflect the earnings multiple. So I must say that that's been a big change for us.
It's a different skill when you have to raise funds for each fund.
Yes.
Oh, welcome to my world.
To be honest, life is a lot easier as a developer where we just decide on your own balance sheet to invest.
Now you have to please all your fund, your LPs and all your investors.
Yeah, and we have a big listed REITs business and a growing private funds business. We have a listed CLI and we have 8 listed REITs under CLI. 5 in Singapore, 1 in Malaysia, 1 in Japan.
China now.
And 1 in China.
Yeah, congrats on that.
Yeah,
First
so it's quite lucky.
Yeah.
The total market cap that we manage as a group, externally managed REITs, manages about 60 billion. So it's not
60 billion, it's not small.
It's not
big.
small.
Yeah.
I mean, all the different regimes, all the different regulators that we need to deal with.
Yeah.
It's a lot of work.
It's challenging, right? Because you're in how many countries now?
We are in 40 over countries, but a lot of that is the Ascott's business.
Okay.
The key investment markets, we are less than 10.
Okay.
Yeah, so that's really where we play the asset management business.
So let's change to the geographies, because you're in, let's say, 40 over countries, but your key markets, probably less than 10.
That's right.
Where do you see the opportunities? And why invest in a CapitaLand fund?
I think for market opportunities, in my view, a large part of it will still be Asia Pac based on...
Is it still Asia?
Asia Pac. I mean, it's a place where we have strong advantage, we have strong boots on the ground.
So that's like us. I mean, we've always said we stay focused on our backyard, and our backyard is Asia, and we're focused on Asia as well. And looks like you too, right?
Yeah. People know us.
Plus Australia.
Asia-Pac, so we consider everything from China, India, Southeast Asia, Japan, Korea, Australia. These are our key core markets.
Your core markets.
Where we have big, strong teams on the ground, ability to find good deals. Banks know us. We have done great deals, and we are building very, very strong teams. And I must say that even though the fundraising environment for real estate has been challenging in the last few years because of elevated interest rates, I must say that we have done pretty well in terms of fundraising. I mean, comparing with all the big guys that are playing in Asia.
And so what's your pitch, Chee Koon? What do you tell potential investors? Why you? Why should they back you and your fund?
First, we have boots on the ground, local knowledge. We co-invest.
They want to see you have skin in the game.
Yeah, we promise high quality, consistent returns.
Okay.
That's our brand.
Yeah.
So if we say that we're going to deliver 10, 12%, we want to make sure that we deliver 10, 12%. If we're going to deliver 15%, we're going to make sure that we deliver 15%. Let's focus on making sure that we can deliver returns based on what we have articulated, based on our boots on the ground. And I must say that so far, based on the track record, based on the team's ability to execute, to find deals, and to be able to return the capital, we have been able to, I would say, make our investors quite happy. Yeah.
Great. So where are the opportunities? Is it in Australian office? Is it in Japanese multifamily homes? Is it in India? I know you're looking at Bangalore. And of course, what about China? Because it's interesting, we've partnered with you for so many years. And I still remember when you went to Australia, for example, right? We had a deal and we came in quite quickly when you needed us. And similarly, when you had that restructuring in 2021, I think, was it during COVID? You said it was during COVID. I remember having to go to the board and have a quick turnaround within 2 weeks, right? So you have to make these decisions sometimes quite quickly because markets...
And you need strong partners.
You need strong partners. Yeah. So where do you see the opportunities so that as a strong partner, I can follow you?
So, I mean, to be very honest, the big backdrop, I mean, geopolitics, has changed the game quite significantly. The world order has changed. I think all of us are familiar. Countries are recalculating, companies are recalculating. So when we look at investments, we want to make sure that we have very strong convictions around themes.
Themes, okay. Wait, I heard about your 3Ds.
Yeah, disruption, demographics and digital. So we just want to focus on these three areas and how we can find opportunities, how we can scale, and how we can confidently find exits for many of our LPs. So we bought Wingate in Australia. So it's not a big outfit, but they've been around for a long time. Good track record. And we believe that's an area that we can continue to grow. If you know that in Australia itself, the banks are withdrawing from a lot of land financing, construction financing. So it creates an opportunity for real estate asset managers like us. We have gone into private credit space, but we're just going to focus on private credit relating to real estate. Not corporate credit. We understand real estate. In the event there are any issues, we can always take over the real estate. We can make things good and we can handle the exits for many of the players. So Australia, Korea, you will see hopefully us doing a lot more in India and opportunistically in Singapore as well, in the private credit space. But Singapore is not easy because it's overbanked and there are not many opportunities. Sometimes there are opportunistic events that may appear that we can come in and play a role. So that's how we do.
So Chee Koon, I was chuckling because you have your 3Ds, I have my 4Ds, and there's some overlap. My team knows that my first D is dependable. We have to be that dependable partner for our clients through thick and thin.
In good times and bad times.
Good times and bad times, especially in bad times, you want to be there. The second D is like you, digital. The third D I have was disrupt. And I wanted to ask you about the disrupt piece. But I told my team we have to learn to disrupt ourselves, right? Because if we don't, somebody else will. And the digital disruption, the Gen AI disruption, the agentic AI disruption, it's all real. And jobs are going to change. The future of work's going to change. And we're going to have to change with it. Agreed? And we have to learn, relearn, unlearn, and try new things and keep experimenting. Asking you about sort of back to work. We kind of experienced COVID, no need to go to work. And then now everyone's going back to work. How has the digital disruption or the digital transformation in companies affected how the world looks at real estate and how you look at real estate? And has it changed dramatically? Because I think people still want to go to work, right?
People still want to go to work. And to be honest, during COVID, I thought that going back to work would change quite significantly. But I'm at least temporarily relieved that it seems like big companies in the US, in Europe, and Asia, work from home is not such a big thing at least. But people are getting all the employees back. But to be honest, I think that there will be deeper changes in how work will be done. how processes will be changed because of AI.
Yeah.
I don't think we have seen the full impact.
No, it's just starting,
If you ask me, how would that change the demand on office space? That's still something that we need to watch quite carefully. So that's why for us, I believe office space will still be relevant. You need to invest in office space in good locations. Amenities must be good. It must be super environmentally friendly and cozy for people why people need to go to work. And I don't believe that you can invest in office like in the past. In the past, office is a big asset class for many of the pension funds.
Yeah.
Because you can lock in 15 years of
long
leases.
Steady income stream, right?
I don't believe that investment thesis is
So
going
that's
to
no
work.
longer valid?
That's no longer valid.
Wow. That's a big change.
Yeah.
So you think shorter lease periods,
Shorter
it won't
lease
be
periods,
15
good
years, it'll be like
locations,
3, 5. But location is still,
Location is
that's still important, right?
Yes.
So that's office, but pivoting to your other business, which is hospitality. Surely that with everyone now focusing on experiences, staying longer, right? When they travel, they want to stay longer.
Yes.
They want to have better cultural or local experiences, get immersed. That must be great for your hospitality business. Share some changes.
The hospitality business is really the Ascott's platform.
Yeah.
It used to be separately listed.
Well, you used to run it. You were CEO, right?
I was CEO, but that was after it has been privatized. CapitaLand privatized in 2008 or 2007, around then. And it was a business which typically focuses on trading assets, and they only typically manage assets that we own. So it was after we had privatized it, and we decided to really take a asset-light approach towards growing the business. We injected the assets into the REITs and the funds, and then grow a big platform. Today we have about 170,000 keys globally. Of course, the big players, the big hospitality players are 1/1,000,000 in terms of keys. But in terms of service apartment operator, we are definitely the largest, at least in our part of the world. A lot of huge potential.
It has huge potential. I've stayed in your place in your asset in Tokyo, and it was great, so well managed, so clean, great location. Frankly, almost better than a hotel.
Yeah. I stay there a lot, and it's a great business. Some people may not know. For every contract that you sign, typically it lasts for 20 years. Some are getting 30 years and 40 years. So the fee income,
it's very steady.
It's very,
and
very
long
steady.
dated. Yeah.
And as you build this up, as the properties becomes operational, the fee income will just continue to
So it just snowball it. So basically you
Snowball.
just keep getting more and more assets, and it's long term, and it just keeps snowballing. Wow. That's a great business.
And it keeps renewing. Usually the owners are generally happy. Then what you need to do is to strengthen your
operational capability,
marketing, your digital capabilities.
So you must have a great database of customers, right?
We started a loyalty program.
I signed up.
7 million customers and growing.
You've got a lot of loyalty programs, Chee Koon. You've got your Ascott loyalty program, you've got your CapitaLand, all the malls, right?
That's right.
There must be a lot of interesting customer data there.
Yes.
And
things that
cross-sell opportunities.
Yeah, we should work more closely with the
rewards, right?
Our Capstar program. It's a lot of data.
It's really good.
So it's something that we work quite closely.
We work
with
closely
DBS
together. And we just use the blockchain now. Actually, reward points are like another form of currency when you think about it, right? Whether it's miles or points, it's another form of currency. It's just not cash. And these currencies can be burnt in any of your shops or your hotels or anywhere for experiences or for credit. As a asset owner, what would you be thinking about using this customer data for? Really enhancing the experience, being more targeted in your nudging or cross-selling across platforms?
Mainly twofold. One is in the hospitality side. In terms of the booking journey, where you decide how to invest the next dollar for hospitality assets, locations, and our confidence level in terms of being able to deliver the better returns. That's extremely important for us, especially on the hospitality side. Shopping mall, I must say that our data is strong in Singapore and in China. So having the tenants' data, having the shoppers' burning of the points and where they shop, what they buy, that helped us to curate and the negotiations and how to bring in different tenants to curate a better experience for the shopping mall.
Do you think shopping malls are a bit dated?
I mean, if you look at Singapore, our malls are packed. One good thing about Singapore government is that there's a very strong urban planning. I mean, they regulate the supply of shopping malls. And with the increasing, I would say, whether it's visitors or even the population in Singapore, even though slowly, you see there's pretty strong, healthy demand for shopping malls.
But people still want to shop in the same old names, or is it more experiential? In China, I heard now indoor skiing is a big deal. That's quite, fresh.
China is really
Dubai's
at the
had it for a while. Yeah.
China is really at the forefront.
So what are the forefront stuff
in Singapore?
Well, in retail, whether it's China or anywhere.
The experience in retail in China, they're actually a lot more advanced than Singapore.
They're sort of quite innovative.
Innovative. E-commerce has disrupted a lot of high street fashion in China.
Yeah.
So you need to constantly think of different experiences that you need to curate in the malls to make it relevant. Why are people coming to the malls?
Yeah.
For the regional malls, those that sit on top of train station, I think those are fine.
Yeah.
But for those that quite off-center in terms of location, if you do not have a good theme, the mall is just going to be empty. That's the level of competition that we see in China.
Yeah.
In Singapore, it's a slightly different issue. Singapore, first and foremost, is small. Secondly, it's hot.
Yeah. People go to the malls to cool down.
People go to the malls, right? They spend time there
and to eat. Yeah.
So it solves a different problem.
Yeah.
It solves a different problem because you can't be out there walking because you're perspiring. So you end up having your coffee, you do your work in the malls, you send your kids for tuition program in Singapore.
Also in the malls,
Yeah, it's all in the malls.
Yeah.
So it's a slightly different...
It's really part of daily life for us here.
That's right.
In China, it's curated experiences.
That's right.
Yeah. So interesting.
Totally
Totally different.
Yeah.
So talking about China, what's your view on China real estate?
The Chinese real estate industry has been quite challenged in the last few years.
Yeah. Do you think we've seen the end of it?
I can't quite tell whether we have reached the bottom. Anyone who has invested in the Chinese real estate market would have asset management issues to deal with. But if you ask me in terms of China as a market, if you look at all the different industries, they are really at the forefront, whether it's EV, whether it's hospitality, every industry, they are so strong.
Yes.
And I personally hope that, we are seeing a gradual recovery in terms of the stock market.
Yeah, consumer confidence,
if that continues
Yeah.
to sustain, the growth continues to sustain, people start to feel comfortable to spend. And then I would hope to see gradual improvement in the real estate sector. But even though China has been definitely a more challenging market for us than most other markets that we operate in, I must say that we have done pretty interesting things. We have been able to recycle. We created a big master fund with a local insurance player, 5 billion renminbi, to help to recycle assets and to look for opportunities. And let's do that first and do that well before we ask them for more capital.
Yeah.
And I must say that just 2 months ago, we managed to launch the first REIT in China. It took us a long time.
Yes, congratulations.
We are the first foreign player that launched a retail-focused REIT in China. It's traded very well. I think given where it is trading at today, it will create another optionality for us to recycle more of our shopping mall assets into this vehicle and allowing us to grow our asset management capabilities.
Yeah. And I remember you also did your first Panda sustainability bond in China as well.
Together
with us. Yeah, thank you for that.
Yeah.
So your last deal was demographics. And you said China was at the forefront of being transformative. Do you see this trend of converting assets now into not Yanglao, which is silver hair economy or aging, but Kangyang, right? Which they say healthy living. That's the word in Chinese.
Yes.
But do you see that trend starting now where you can change some of your assets or build assets to help with an aging demographic that's still that's mobile, want to live well, but may not want to have a traditional home and want to be in a societal living that is meaningful and not lonely?
So we see that already happening. We have about 250 service apartments in China operating. And we used to only have I would say 70% foreign customers. Today, it's about 80% domestic customers staying in our service apartments. And even before this trend of senior living type products, we actually have people who have sold or leased out their villas, their big apartments, and they've chosen to stay with us in the service apartment.
Right. Because they don't want to manage a big villa. They want to have services,
There's
right?
community, there are events, and they feel comfortable. They're healthy enough to make sure that they can move around on their own, and they don't have to worry too much. But I do see a big opportunity of that growing. The issue is, how do you integrate the product together with insurance and to some degree, some level of healthcare?
Yeah.
Because you may be healthy, still active, going to a senior living type apartment. But as you continue to age, you start to have issues.
Yeah.
How do you make sure that you have sufficient medical?
Yeah, you want to be near a community hospital, right?
Some continuum of care.
Yeah.
And if you can get that formula right,
Yeah.
this is a sector that I believe will be red hot.
I think, something we should explore between you, the insurance companies, healthcare providers, and banks, right?
That's right.
We should all work together.
Yep.
We're all surrounded, we're all aging.
Yeah,
we all want to live well and have a community when we age, right? And we're retired.
So there's huge opportunity from a reverse mortgage perspective, insurance
In
perspective.
fact, we started that too. Yeah.
So I think that to me, it's big opportunity in China. So there are different people trying out different models. The key is, how do you build something that is scalable? And across...
And financially sustainable.
Yes, that's the key. Because for us to put our branding and our, whether it's DBS branding or CapitaLand's branding, we need to make sure that it's sustainable.
Make sure it's sustainable and it works. Right?
And customers are happy.
So you think very long term. So do we. And I just want to thank you for the long-term partnership between DBS and CapitaLand that's really happened before you and I started. And hopefully will continue way well after, after we're no longer here.
Yes, I'm sure we'll do that.
We're two dependable partners, but, we learn a lot. I've learned a lot from you on what's been happening in the world of real estate and all the transformation. Yes. And we want to continue to be your partner as you evolve.
Thank you, Su Shan.
Thank you, Chee Koon.
Thank you.
Thank you.